Hey everybody, welcome to Stockradar Stocks on the Move for another week. My name is Richard Lee and I manage the stockradar.com.au website for you. Today's date is the 13th of October 2022. Bit of a sombre day today. I'm down at Bowen Heads with the family. It's a bit dark out there. It's a lot of rain in Victoria, so we're going to hang around inside today. Just as well, the market's also a bit sombre at the moment. We're not having a very happy time. The markets are going down, apart from a few coal stocks, which I'm going to talk a little bit about today. Today I just want to go through, there's not a lot of stocks, but I just want to talk about a couple of things that might help you along with your trading, which is what I'm always about. Okay, so first thing I want to talk about is one thing called the Pareto principle, which means I keep talking about the big wins that makes all the difference and generate our returns from the many trades that we do. So really it is those big wins that generate 80% of our profits. So we do a lot of trading, and so it's sort of a bit like you've sort of got to be very focused on what you're doing and your trends, because a lot of trades will be losers, but you can still make a lot of money if you're very careful about it. Okay, so I'm going to talk about, I go through overseas markets as a background today, go through the Stockradar portfolio, go through some ASX stocks, but really just talking a little bit about your trading and what you're really focusing and concentrating on, because it is a really time to be very disciplined in what you're doing, because there's not a lot of opportunities at the moment, apart from these wonderful coal stocks, which who would have thought are going through the roof a year ago. So here we are. Okay, so firstly with the Pareto principle, I want to talk a little bit about my open positions, which I did talk about last week, and you can see here what my open positions are, and I have about 21 open positions at the moment. Let me just see, 21 open positions and one ETF. So there's 21 stocks here in my open positions, and you can see there you've got Computer Share up the top at 71%, you've got New Hope, Whitehaven, and there's another one down here which is called PLS, Pilbara Minerals, which is I'm starting to make a bit of money. But these are the three main ones that are really making money for me. Here there's a mixture of losses and profits through here, but in the end we're making 9.9%, nearly 10% return, and on an annualised basis that's 42%. So those three stocks are really the big winners. Most of the other losers and losses and wins are cancelling each other out, which leaves us with our big wins, because as we know, we don't take big losses or ever carry big losses. So that's really what I want to talk about today, because that really is the focus, and you will find a lot of trades. Don't expect every trade to be a winner, because it won't. Okay? Now, the markets are a bit sombre today. It's a sad story when I look at stocks like Woolworths, CBA, BlueScope Steel, CSL, ASX, which has had a huge dive, Macquarie, Goodman Group. They're all very sad looking charts, which unfortunately is not what you really want to hear, but it's the fact of life at the moment. So there's a couple of stocks there, some of the miners, BHP, Newcrest, Rio, starting to show a bit of support. They've come off a fair way. And so with the stock picks we've got, I'm going to go through a few today, just to repeating them, reaffirming some of the things that I do. And we've added a couple more miners and things in there, Independence Gold, Mineral Resources, things like that, just to add to the flavour of our 20 stock picks there. Okay, so just be a bit careful out there. You've really got to be focused on what's going up, and we will focus on that today. Firstly, what I will do is I work the overseas markets. I'm a little bit dark today because I don't have my special studio lights on today, so just bear with me. I know I look nice and brown and things like that, but I'm not really. It's just a bit dark down here because it is a bit dark outside. Okay, so firstly we'll go to the Dow Jones. And again, the picture is not fantastic. It's down. We've had a failure here at S1. We're down again. Volume's quite high. Momentum's negative. The trend is down. So that's really what we're looking at there. Nasdaq is the same picture. It's not a really happy event. Unfortunately, we're breaking support again. There's high volume here. And the rally last week just petered out. We get very excited about these things, but look at the reality of what's happening. The trend is down. That's what our focus is at the moment. When the trend changes, I'm happy to change, but for the moment, it's not. Now we can go to copper, which is another one. The commodities are not looking that flash either. Trend is down. It's having a little bit of a two-way business here. We've got a bit of activity here, which is good, but we've really had this big picture here of an uptrend, big distribution pattern, and now a downtrend, and eventually we'll accumulate again and we'll start going up again, but we just have to wait for all that to happen, because it's not happening right now. The trend is down, activity is high, and all the momentum indicators are weak. Gold is the same. Well, we haven't been very excited about gold for a long time, and it just looked pretty appalling. The US dollar is so strong, gold can't really go anywhere at the moment, so put your gold stocks away for the moment, and we'll look at those later when things maybe look a little bit better. Okay, and crude oil, well, it's probably the better of the commodities. It's had a bit of a rally last week. So it's stuck in this S1, R1 range at the moment. The trend has come down again now. It's still holding, unlike the other ones, which are all breaking there. We had a big spurt up last week on some good volume, which the buyers are prepared to jump in. So S1 could be a hold. I talked about this before. It's not such a negative thing. It could be more corrective. We're heading into the Northern Hemisphere winter. There's going to be demand there, whether it's for gas, oil, whatever. They'll be keen to get a hold of it. So prices will probably stay reasonably firm, I would think. The momentum indicator has turned negative on Brent crude, so really we are a bit of a neutral picture there at the moment. So sorry the news isn't that good, but that's just the way it is, and that's what we see. So now we go to our favourite market, the ASX 200, and in the scheme of things, we're not doing too badly. Okay, we're actually holding that S1 area, unlike the other overseas markets. We've had a bit of a bounce. We've come back a little bit. We're going to be flat and boring today, which is not really a good day. So the ASX 200 is, it's looking okay, but really we've got this area above here, which is going to provide a lot of resistance if it does get up there. So for the moment, we'll just be very careful. And we'll talk about the stock pick count before. It's been very weak for so long. It's been a great indicator, and sometimes you just can't do things. They're just not there, so you just have to be patient. I talk about the stock pick, the trend intensity and the stock pick count in my newsletter last week, and I show a big graph from 2003 to 2022, which gives you a picture of how it works together. So it's a bit more volatile than the index, but it does give you very good guidance in major highs and lows of what the market's doing at the moment. And for quite a few months now, probably about 12, it has been very weak, so the market breadth has been bad, and we've been going down roughly for about, for sideways for a while, but down, sideways to down for 12 months. Okay, so that's not really the fantastic picture you want to see, but that's the way it is at the moment. Okay, so now if we just go across to look at the Stockradar portfolio, it's up 2. We picked up 2 stocks this week, and so we're up 2 to 20 stocks. We're still at 14% equities, 86% cash. Okay, the ETFs is 1, which is bear. Conservative portfolio is down another 1. It's only got 2 of 20. Again, breadth is terrible there across the main leaders there. The Energizer 5 is 4 out of 5, and then mainly sort of Woodside and Whitehaven, things like Computershare, things like that. So there are trending stocks for us to make some money on, but just not a lot, and that's why we use the Energizer portfolio, so we can just focus on those few stocks. And the Energizer 10 is actually down 1 to 7 stock picks of 10 this week. So not a great picture. Top sectors, nothing in the trending zone, so that's a blank at the moment. Okay, so that's really how the Stockradar portfolio looks and how the markets look, which is not that fantastic. So let's just have a quick look at a couple of stocks here that I have talked about for a while, but it's important to reaffirm this, especially with Whitehaven Coal. We've had 3 trades in Whitehaven Coal over the last 12 months. We've had 1, 2, and the third one has just been a real blow off, 75% in a couple of months, which is a fantastic return. And it just shows you that you don't know where these trends are going to come from. So you just have to be vigilant in how you approach it and how you see it and how you manage them, because they will occur. You just have to let them occur. Okay, so Whitehaven Coal is up 75% in a couple of months. Still bullish, still looking good. Trend intensity rating is 10, making new highs. You can take a little bit of profit off the table, but you can still manage to hold your position in there. So Whitehaven Coal, it does look very good and has performed well. And even those signals there that you see that we have got out of here a couple of times, really we did the smart thing, because we had some huge volume. The evidence was there, and we just don't know when we're going to have this tumble down, when Whitehaven Coal is going to come back to zero, not back to zero, come down again, but it has done this before. So the tide will turn at some stage. So just manage your profit. At the moment, we keep lifting our stops and locking in profit, which is what we do. And I'm going to talk a little bit more about trade management in trading tactics later on. Okay, New Hope is a similar situation. We've had a reasonably quick trade on this one. It just broke to a new high back with the same day that Whitehaven did, and it's gone up 55% in very quick time in a couple of months. So it's been a great little return for us as well. So although the markets haven't been very good, the coal stocks have been marvellous for us and done us proud. Okay, so that's those 2 coal stocks. Nanosonics, I'm probably going to finish up on this one because we've been following this for a while, and I guess the thing that I want to talk to you about here is when we were back in August this year, we had a huge rally in Nanosonics, and I think a lot of people got excited. There were a few other Techo stocks were going well. I think Polynova, maybe Promedicus, a few of them starting to rally, and we can get very excited. A good volume, good rally, but as I said to you there, we need substantiation of a trend reversal, which means we need a pullback and we need buying to come in to support that stock, and that's a really good substantiation for a trade. Now here we've had a pullback. It still hasn't made a new lows yet, so it could possibly still turn around and go through that trigger point there. But realistically, what we're looking at now, we've got some volume. This has come back quite deeply. It's a higher low. Will it hold? I don't know yet. Or another leg down. So we still have this downtrend line here. We've got resistance here. So the reversal through here is key. It hasn't happened yet. So, you know, it's looking like we just have to be a little bit careful. I'm not going to follow this anymore. You can watch this yourself. We'll look at a new one to follow because this really hasn't really done much at all. So for Nanosonics, the message is here: when you see a rally, initial rally off of those, don't get excited, wait for the pullback, wait for substantiation and validation of a trend, which means it's got to come back and rally through that peak that it made initially. So it's now trend intensity rating of -6. Okay, so that's Nanosonics. Another one we recently entered was Pilbara Minerals. This has been quite a volatile one, this one. But, you know, we've had a couple of trades in it. We've done pretty well on this one. Currently, its trend intensity rating is 10. And if we look at this beautiful stuff down here, the volume, the momentum, that alignment of the stars, which we love, which gives us a trend intensity rating of 10 and a price break. It's beautiful. It's a beautiful thing, but we always manage our positions with a stop. Okay, so Pilbara Minerals looks fine, and I don't know what's going to happen today, but it's probably going to be a bit sluggish, but we'll just have to just be patient on that one. Okay, and the other one I'll show you is Computershare. It's knocking on the door, continues to. I keep showing you this all the time because it is one of our big winners, and it's one of the few big winners in the market. Sometimes there's lots, sometimes there's only a few, but we're going to hang on to this one for the moment until we're told otherwise. Now it's having some resistance at $26. It hasn't broken down as yet. When it breaks down and our stop goes up, we will get out. But until we're told the trend has ended, we will hang in there, and maybe it will break higher and go higher again. I wouldn't be surprised if it did. So we'll just have to wait for that. But it still looks pretty good, Computershare, despite the resistance there. The buying has been resilient. Okay. Another one I tipped some of my subscribers into on the newsletter a few weeks ago was a little stock called New Solar Energy. It's just had a very simple pattern of, you know, downtrend. Whoops, get that down again. Get that up a bit. Downtrend and accumulation pattern, and then it starts to break out of that accumulation packet, and then we get volume, we get momentum, and we get a price break, and they're the steps that I follow. Okay, when I look at any trade, price breakout above the moving average, volume expands, momentum bullish, and then I set a stop. That's the trade process. Behind that is the downtrend, the accumulation phase, which is a normal stock cycle, and then we have an uptrend phase, then we'll have a distribution phase, then we'll have a downtrend, and that's how it works. Anyway, we're now in the uptrend phase, and that's what we want because we're long-only traders, and that's what we do. Okay, so that's the stocks I've got for you. Now I want to get into trade management. I talked a little bit about to member this week, a bit about, you know, what I do, how I get in and how I get out. And when I get into a trade, I don't analyse every move because it doesn't really do me any good. So really what I'm doing is I'm using analysis to get me in. I get that alignment of the stars, I get the trend intensity rating, I get the price break. It gives me the evidence that suggests to me the price is going to go higher and we are now in a trending move, okay? So that's what I get in. So I know why I'm going to buy. Okay, so it is analysis is what gets me into the trade. There's a buy process that I follow, which I just showed you in the last chart. So what are your buy processes? What are the key things that you look for that says you are buy? Because if you don't know that, you should know that. Okay, I use a trend reversal and a new high. There are 2 price setups only that I use, and that's all I need to make money. Okay. Secondly, when I'm in the trade, what happens then? It then becomes not an analysis process, it becomes a money management process. I've got to manage that trade. So I showed you Aristocrat last week, but what I do is I use a protective stop. So once I'm in a trade, I set my stop at a predetermined amount, and that tells me what my risk is, and it will never change. Okay? And that's just how it is. It's a matter of just doing it. Don't think, wonder, don't doubt, don't ever sort of change a stop. Just if it goes off, you get out. So it will protect you against those big losses because I don't take big losses, I take big wins. And that's what I do. Okay, and that's how I make money. So if I don't take big losses, I'm going to bias my position to the upside. So I protect against big losses. I set my initial risk. My initial stop goes down here on this position here. Okay. And what it also does, it protects my profit. So once I'm in one of these trends, whether it be Aristocrat, which was a while ago, could be Computershare. We've seen all sorts of stocks do it, BHP, JB, Hi-Fi, all sorts of stocks. The coal stocks are doing it now. I must protect the profits that I've got. So I just follow up with the stop loss, stop loss, stop loss. I will never get the top. I'm not interested in that. I'm interested in making money out of a trending move. So the trailing stop will protect me from losing the money that I've made, okay? And that is a big problem for a lot of people actually taking the profit because they always want to make a little bit more. Sometimes the reality is you're not going to, and you don't want to see your profits disappear because that is very frustrating. So it is analysis in for me, and once I'm in a trade, it is a management process completely. Okay, nothing to do with the analysis, okay? Because that will confuse you. You can overanalyze things, you can look for things you want to look for, and then it becomes subjective, and I can't do that. It must be objective. Okay, so that is what I do, and that's how I trade. It's very simple. 2 setups in, one exit out, which is my protective stop, analysis in, money management out. That's the process, okay? So, what's happening at Stockradar? Well, I put the newsletter out a couple of weeks ago. It examined the trend intensity indicator, which I talked about in the stock pick count, which we know has been telling us all this time about staying very close to a cash position, okay? I show a big graph there going back to 2003, which is something for you to have a look at in the newsletter. Okay, so that's all I've really got for you today. I'm going to tell you things about remember the Pareto principle, the 80-20 rule. You can relate it to all sorts of things in the world, and it relates to trading especially because those 20% of trades are the ones that make me the money, okay? So don't expect every trade to be a winner. Focus on your trends and manage them religiously and carefully, okay? It's very important. Who knows which ones will be your next big winners? Nobody knows. Can anybody tell me why Computershare is going up so high and the market's so bad? Coal stocks, who would have thought a year ago that they're going to go up? So we never know. We'll always be surprised. So don't question the stock. Just follow the price movement and it will guide you in the right direction. So be unemotional, disciplined and confident in your trading and in your trade plan because it's really important. If you are, it will work. It will work well. It's when we don't follow our trade plan and we doubt and we wonder, that's when we start to lose money and it just doesn't work. Okay, so stay safe, watch your trends, heed your stops, and I'll see you all next week. And we're hoping for a slightly better week, but we'll just take it as it comes. Okay, see you later.